Of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We'll start out the day like we usually do, taking a look at the DAX. 1 second, please. As you can see, we've had a pretty big sell-off from the high. We've come down. This is a daily chart, so you can see that it's had a pretty big drop on the dailies. Now we're trying to find, some type of a bottom in here. The $64 question is, will this bottom hold? If we start going below these recent lows, that is going to be an extremely negative chart, folks, because the rally was not even 382. That would be a very, very suspicious rally if you don't get to that level. We've seen this happen in the interest rate market, and we've also seen it happen in the stock market on the way up. In other words, it wouldn't even back off to the 38%. Now, if we take a look at the FTSE, you'll see here that we have a possibility here of the market holding, because we just had a Gartley complete just a little while ago, yesterday, and it's still above that level today. Even though it's down on the day just a little bit, it's still holding the 7,000 level. We must hold the 7,000 level in the FTSE, otherwise this will be, a failed pattern. Remember that high that we had up there at 77.90 was a perfect 1.618 expansion ABCD. So there's always the possibility that that could, that could be a major high. And I believe we have to take incredible amount of emphasis on this next chart from our good friend Jim Bartolioni. And this is that NASDAQ chart going back 40 years. And that the fact that that hit the exact 1.618 level up there at 75.55 in the NASDAQ on the monthly chart, and the BC swing, if you multiply it times 1.27, it takes you exactly to the CD leg of that would take you exactly to the same level. So when you have two of those coming together, and then the market sold off from that level, it didn't go through. So that tells you that that is some type of a major high, and now we're looking at something that is could be very, very ominous. But as long as we can stay above the 2,700 level in the S&P, we've got a little bit of a chance to rally today. But we've been down 5 out of the 6 days, which is very unusual in itself. But that's the main thing that you got to remember, is that sometimes they go down 8, 9, 10, 11 days before they turn around. Now, one of the stocks that's in the news, someone's asked me to talk about it this morning, is the Facebook. And we'll put this up here, and so you can take a look at Facebook here. This is basically an hourly chart going back over the past several months. You can see the 3-drive pattern that was up at the high there at 195. The market broke all the way down to 171, and then it made a beautiful Gartley pattern to the exact 61% retracement back on March the 10th. And as you can see, the news came out, and now the stock is trading below 71. So the ABCD structure on this, you went from 195 down to 172. That's 23 points. And then if you subtract 23 points, from the 86, that's going to take you down to, it's going to take you down to about 153. It will be the big ABCD structure in the Facebook if we get there, but that's what it looks like. And with that big gap that we have here, because of the news that came out yesterday, that's going to tell us that yes, there's something wrong, and what it is, we'll have to wait and see. It has something to do about selling data, but again, I'm not sure exactly what that is. We have to have a little hat trick, tip of the hat for one of our subscribers up in that listens to TFNN up in the Canadian area, because he alerted us to something that was really interesting yesterday, and that was in the wheat. Remember, this was before the opening, so you'll notice here, this was actually the chart from the newsletter. We were looking for wheat to come down to the 507 level, but Mike from the told us that, we're most probably heading down to that level. And as you can see, we almost hit there last night, and I believe we're trading very close to that this morning. So there should be some support here in wheat at this level. Longer term, I think the grains are getting ready to make some type of a turn in here, but right now we're looking at this on a daily basis, and that is a 61% retracement off of the low we made back in December. So that's the main thing. The important thing is if you'll look at the 61% retracement from the high of last July, that came in, basically when we had that new moon back on the 29th of February, and you'll know, excuse me, that was a full moon. Wait, that was a new moon, I believe, and because we had one on January 29th. And so that's what we're coming into now is major support. Now, I'd love to see an ABCD structure in here, but we don't have that, so it's not as easy to trade those. The ABCD structures allow you to look at like 3 different ratios at the same time, and if you can get these ratios to line up exactly the way you'd like to see them, then that's the main thing that you'd like to take a look at. I've been asked to take a look here at the Bitcoin. This was as of yesterday. I want to bring it up because we've had a very good rally here. We stopped, you'll notice, exactly at the 78% level, missed it by about 25 points, and now we're trading up around 8,500, I believe. So we rallied about $1,300 a share. But this is the circling the wagons, folks. This is the MOB, the make or break area in the Bitcoin. Because if we go below that 6,500 level, that sets up a monster ABCD pattern from that high at 20,000, and you're going to be looking at $3,000 a share in the Bitcoin. So I don't know. There's a lot of news out there, I can tell you that. I mean, everybody's got something to say about it. And it's so doggone intense that it's way beyond my pay grade. I just look at the charts, but it's got to hold this level here. Otherwise, it's going to, start to look like a potential bubble that they've been talking about. But it's tradable. I mean, there's a lot of trading goes on in this stuff. I don't know the exact volume, and it's hard to figure out, I think, because of these different exchanges that they have, and there's virtually no volume going on in the CME. At the Merc, I think we got an open interest of around 1,800, which is, basically nothing. So this is what we're looking at. We have a break coming up here pretty soon, and then we're going to go take a look at the gold market again because we're getting closer and closer, to this level that we've been watching for quite some time. And if we get there, it's going to be very, very interesting to see if we can do that, very easily. Now, one other one that I wanted to mention this morning is the natural gas, because we had this level that we're waiting to see. We're there right now, and I wanted to bring it to your attention because we're just making a perfect 61% retracement from the low back on February the 12th. We rallied up, we pulled back. We're right there right now, so you got to risk about 3 cents on this to see if you're right or not. But this is we're down 5 days from the high, right at a 61% retracement. And unfortunately, there's no ABC in between, so all you have is that one ratio. But you do have a place to put a stop, and that's below the 786. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we're going to talk a little bit about this gold market because we're getting pretty close to those levels that we've been waiting for. If you'll give me 1 second here, hopefully I'll be able to get the chart up so we'll be able to see it. And you'll notice here that yesterday's bottom came in at pretty good support down there at 1308, and we did rally up to 1318. We're trading at around 1311 right now. I still think we're heading down towards that big level of the 1282, which really sets up a tremendous ABCD pattern that could be, you know, the mother of all buy patterns if it in fact gets there. But, you know, we are still quite a bit a ways from it, but we'll bring it up to your attention again. The actual number is 1288, and if we put this up here, you'll be able to see it here, that's the 61% retracement of the low we made way back in 2017 towards the end of the year. So that's what we're watching here in this gold. That's what that's what it looks like. And I really think we're going to get there. And one of the reasons that I say that is if we take a look at the relationship between gold and silver this morning, just take a quick look at it here if I can get it up. I think there we go. You'll notice here that silver is still acting extremely weak. You know, you'll notice the blue line there is the gold market. That's not acting very strong either, but you can see the silver is acting very, very weak. We really need to see a pretty good move. Now we're trading at around the 1630 level in silver. We'd love to see it about $1.30 lower, down around $15 to wash everybody out. That would complete the long-term Gartley pattern on the weeklies and monthlies that give us this number. It also gives us that number on the daily too, so we'll see. Now, the devil's advocate says that what happens if we don't make that target of 1288 and then it turns? Well, that's a trading decision that you're going to have to make, and fortunately, you make those you make those decisions all the time. So mainly the main thing that you want to be looking at is to see that if we don't make it, the market will have a pretty good move out, and then it'll give a secondary retest, a small Gartley on the half-hour pattern, and that's the one that you'll have to look at if we get there. But right now, it still looks like we're heading down towards those levels. I'm not sure. The opening indication we're told on Facebook is at the 169 level, and I believe we're going to get down to about 158. That'll be a big ABCD. You can, defy human nature, do the work yourself. Just go back and look at the high from 195, down to 171, 171 up to 183, and then you subtract that, and bada bing, bada boom, that'll take you down to about 158, I believe, in Facebook. So I think that's where Facebook is going now. Is that enough to pull the NASDAQ down? Probably not, because you've got a lot of expensive stocks in that NASDAQ, and some of them are still acting relatively bullish, i.e., Amazon and Google and even Apple. Even though Apple's down around the 174 level, it still is acting relatively bullish given the rest of the thing. The market has not sold off, very, very much as of yet. That doesn't mean that it can't, but it certainly could. Now, we had a bad day yesterday in the market because once we broke that 2730, that was a very, very important number. And what did it do last night? It rallied right back to that 2730. We rallied 34 handles right back into that area. So, and that was nothing more than a 382 of the previous day's range. And so that's telling you that the market is still under a great deal of pressure. Yes, we will find out whether they go up or down. But the one thing we absolutely know about the stock market and the futures market and the foreign exchange market, they do fluctuate. So I think those were the words of Will Rogers. Anyway, we'll see how these things come out. But anyway, we'll keep an eye on this to see what's going on along with some of those things. Regarding the Bitcoin, someone's asking the question, would I buy Bitcoin here? I'm not involved in these cryptocurrencies, and it's like the internet when it first came out. I was just absolutely scared to death. This is really something to pay attention to. Excuse me, I'm getting off the track here. I'm reading something in the den and doing something different, and I better stop that. And now I've lost my train of thought. This has been a tough day in the last 24 hours here in Tucson, folks. Those of you that have been out here to visit me know that one of my very good friends here is my neighbor, Kelly, and he's going on 95, and he had a very bad episode yesterday. He had a cardiac arrest, and we had to take him into the hospital, and he's still in cardiac care, but he's doing a little bit better. But he doesn't have any family here, so Sarah and I, we basically check in on him and, sort of take care of him. So I had to contact the family. So if my little phone rings over here, I might have to go to the hospital this morning. I don't think that'll happen because I called a few hours ago and he was doing quite well. So he's still holding on at 95, but it's getting very, very weak. Anyway, let's move on to a couple other markets. Talking about the gold, it's got so many things coming in at 1288, folks. I think we have to wait for that. That's not very far away. It's about $25 from where we're trading, well, say $30 from where we're trading right now. And that $30 in gold is really nothing. That's really a very, very small amount in the gold market. Silver, a little bit more so, because that's about $5,000, about $6,500 in silver. But with some bad news or a washout by somebody, you could easily get it down to that $15 an ounce level, where I would highly suggest, take a look at that, because that's a long-term Gartley pattern on the dailies and weeklies and monthlies. So it's something to really to see what's going on. Anyway, that's what we're looking at. Let's take a quick look at the markets here. Let me look over my shoulder here and see where we're doing here. The euro had a really interesting move yesterday. If you recall, we had an important bottom coming in at that 2340 level. Let's just get this up here so we can take a look at it. And it had a tremendous rally. We rallied over 120 points in the euro last night, and all it did was go up to the 78% retracement of the previous high up there at 124. 25, and that made that a 135 pattern, and we've given up over 100 points just since the middle of the night. So this tells us that this is getting ready to break the 122.50 level, and that's going to send the euro heading towards the 120.75. So this is a market that has had a good rally. It had a chance to really blast off, but it stopped spot on at 123.90 and has just rolled over. And, you know, we're trading down to 122.78 right now, getting ready to challenge the old low there at 122.50, which held, and it held well. But unfortunately, it's giving it up now. So you've got to, you know, change your status to maybe from being bullish to bearish. Now, longer term, we still feel that the euro is heading a lot lower, and we haven't taken out those highs yet, so we have lower tops. We do have a higher bottom in there at the 61% retracement, but it's beginning to look like it's starting to move to the other side of the wall here. Now, someone's asking me about the crude oil. Folks, crude oil is at a moment, it's at the moment of truth. Watch the spot crude at 63.30. That's the 78% level that also completes an ABCD, and we'll see what's going to happen. 877-927-6648. We'll put oil up when we get back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're going to take a look here at the crude oil chart. I believe I have that crude oil chart listed up here. I don't. Let's just get it in here so we'll be able to see it, and everybody will be happy camper. 1 second here, and we'll put it up. Oh, that's not so good. All right, boys and girls, give me 1 second here, and I'll get it up here so that we can get it running, and then we'll see that we just made a perfect Gartley at the 78% level at 63.30. We're now trading at 63.16. It's also a 1.618 expansion of the range from the 17th through the 19th, that two-day move there. And that's a 1.618 expansion of that. It's a 78% retracement from the high that we made back on February the 25th. So that should be a good Gartley number up here. Anything above 63.50 would most probably say that the oil is probably going to go a little bit higher. Now, of course, the president is meeting with one of the Saudi princes today, so they might do some positive things. They might do some negative things. Who knows? Someone's asked a question about these tariffs of $60 billion, folks. 1 second. That is insignificant. It really is. And, you know, well, I'm not going to say anything more. I'm going to get off my sandbox and try to talk about the markets because I know that's what you would rather take a look at. We ought to take a look at the longer-term picture in the crude oil because I want to get the long-term weekly up here just to give you an idea of where we are on a long-term basis. You'll notice back in January of last year, we were making a beautiful three-drive pattern down there at $26. And after that, you know, we went from 26. We've doubled, more than doubled in price. We got up to 66.70. We had a pullback right at the Fibonacci level. This is weekly now. At the $57, we ran up to 63. We're trading at 63.10 or so right now, and it looks like we're heading down to the $55 per ounce level. What's interesting about this is if you look at the cycles from high to high, they are almost perfectly equal, and that goes back from 2016 to the early part of 2017 and into the early part of 2018. So this market is still looking very, very bullish longer term, and if we get oil down to 55.10 on the weekly basis, that's going to be very, very interesting because what it'll do is it will match the low that we made back in April of last year, the correction, and also we made that same correction in July of 2016. You know, that's equivalent of about $15 a barrel in oil, which is no small task. And if you take $15 from your high at 66, you're going to get you right down into that $52 a barrel level. Anyway, that's what it looks like in crude oil, that we are ready for some type of a correction, hopefully getting it down to $55 to $52 a barrel. Remember, hopefully is a very, very tough trading word, folks. You don't want to use hope. You never want to be trading on hope. Trade on, you know, what your charts are telling you and what you have to risk, but forget about the hope. Every time you think about hoping, you might as well move on to something else. I know when God closes a door, he opens a window, but not in the trading environment. All the windows are closed. You have to open them yourself by making the right decisions. That's a really important thing to remember in trading because you're the one that's responsible for this, not anybody else. Someone's asking about pennants and flags. Those are extremely important because they are patterns that Dr. Andrew Lowe looked at in his book, The Non-Random Walk Down Wall Street. But you have to determine, you know, whether you're in a pennant or in flag, and that, you know, pennants are, you know, pointing up or down. And the flags are flying, you know, horizontal. So, horizontally. So that's really how you try to define those. And if you look at the ratios between those, that'll give you a pretty good idea. The one thing to remind yourself is that when you're trading pennants and flags, you'll get a lot of false breakouts. And you have to be able to understand that. Now, when they break out of there really strong, you know, that's a whole different animal, but you don't see that very often. Probably only, and I'm just guessing what this statistic would be, I would guess about 20% of the time you're going to get what we call valid breaks in pennants where they continue to go, and that's okay. Because, you know, you can trade all, you know, say you trade 10, you lose on 8 and gain on 2. That could be enough to, you know, offset all of your losses on the 8, because if it doesn't continue, you just get out of it, because it's meant to tell you that something big is happening. And when that doesn't happen, you have to alert yourself to get ready to protect yourself. And that's the key thing, to remember. And a lot of that is covered in John Murphy's book on technical analysis. The Technical Analysis of the Futures Markets by John Murphy, and it was published by Wiley, I believe. No, McGraw-Hill. Anyway, that's an very old book, but it's got a lot of good stuff in it on patterns. And John, of course, master technician, has been around forever. So we'll keep a look at it. Someone's asked a question about the natural gas. Folks, all I can tell you about the natural gas is that it's setting right at a 61% retracement. I haven't seen it yet this morning, but at 265, that was spot on, 61% retracement. If you're buying down there, I would not risk 63. Just a tad below 63 would be my stop. I wouldn't risk more than 2 cents on this. And then, of course, right under that, is the 78% level. So if you have the risk exposure, you could put your stop underneath the that's a very good one. Thank you for putting that in there, P, because it shows you the book by John Murphy. It's actually a great book. I have a great John Murphy story to tell you. We were in New Orleans at one of the conferences, oh my God, 25, 30 years ago. And John was up talking, and he had a heckler in there. And when you're speaking and you have a heckler, it's it's like getting a tooth pulled without anesthesia. Anyway, this guy was just beating the heck out of John Murphy, and some people were getting very irritated in the audience. And finally, John stopped and he said, "Look," he said, "why don't you come up here and give the lecture, and then everybody will be able to, understand all your brilliance and everything." And of course, this guy, he hovered away and snuck out of the room. But it's really terrible when you have someone that's in there heckling you for no reason, because all the stuff John was doing was, mother, God, and country. This guy just wanted to argue every single point, but that was it, and it was done. Anyway, there's a lot of great books out there, and that happens to be one of them. The Andrew Lowe book is a good book, but boy, unless you're into heavy mathematics and statistics, I would, have you really reconsider that, because boy, it's got so many incredible statistical formulas that are just wow. They're mind-boggling, and the book is quite long. So unless you're really into heavy mathematics, the book by Andrew Lowe is not for the folks out of southern Indiana, maybe out of Amherst and the schools up in Harvard and place like that, but that's a little over my pay grade. I can understand the charts, but the mathematics behind those, I was very pragmatic about this. I knew these things worked many years ago because I could see them happening, all the time. Let's move on here to talk just a little bit about this dollar index, because we're at this real critical level in here. It had a chance to break down yesterday. Let's get this up here so we can see it, and we didn't get that. Let's take a little break here, and we'll talk about this dollar index.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Folks, and we're going to take a look at Deutsche Bank because it has the greatest exposure to counterparty risk of any of the large banks. We don't know about the Chinese banks, of course, and 6 of the 10 largest banks in the world are all Chinese. So you got to remember that you don't get all the information coming out of there that you do in the other countries. But with Deutsche Bank, you'll notice it made a high back at 2014 at $55 a share. And that was a lower high because the other high had been up around 80. But you'll notice that after we bottomed in 2016, the market's only been able to make a 382 retracement rally, and that was exactly equal to the retracement rally we had during 2015. You know, the market rallied about 25%, but it couldn't even get above the 38% level in Deutsche Bank. And at that time, you remember when it got to $20 a share, they offered people a 16% discount to buy the stock. Well, that discount has been eaten up because now we're trading down around $15.50, and it looks like it's heading, a whole lot lower. So let the charts try to help you, where things are going, because the doggone things, they can give you bad information, like we heard at Enron and with Gary Rennick and what was his name? Oh, the guy from Drexel, I can't remember. With Global Crossing, I mean, you just got to watch what's happening, because they can lie to you, they can give you misinformation, they can cheat you, but they can't hide from you. If there's more buying, prices are going up. If there's more selling, prices are going down, and that's the primary thing that you want to remember. Here again, we have the same situation as far as news as when we look at the big daddy of the Dow Jones Industrial Average, the only stock that is still in the Dow from 1894, and that is the stock of General Electric. And you see it's been under a great deal of trouble for a considerable amount of time, and you just can't blame Jeff Hillman for this. Some of this goes back to some of the things that Jack Welch put in, but you'll notice we're down just a little below the 61% retracement that came in around 15 and change. We're now trading at around 1402, but folks, this is a much, much weaker than market stock, and it's so big that it's really hard to turn it around and change things. The one thing you could take away from this chart that I think would really be interesting to look at, and that is if you'll go back to the high back in 1999, you'll notice the perfect 3 drive to a top pattern up there at $60 a share. It's just as absolutely perfect ABCD pattern as you could possibly get all the expansions are 1.27. So that was telling you that that was most probably the high in the stock. And now, you know, we continue to head lower. If this gets much below $10 a share, the only hope they're going to have is to sell off assets and trim down the company quite a bit. And if they do that, you know, the Dow Jones family will certainly pull it out of the Dow Jones and probably replace it with Netflix or somebody like that. I don't think it'll be Netflix, but they'll replace it with something in the news that is, you know, very, very exciting. So we'll watch this very, very, very closely. Another question about the crude oil market. One of the reasons why the crude oil has that little bit of a bearish overtone is the fact, if you take a look here at the long-term weekly chart on heating oil, we've done nothing more than make lower highs here on these last rally. Oh, I hope I did that right. Give me a second here. Maybe we can get this up here. Well, I didn't do it. Hold on just a minute. There we go. You'll be able to see that we've had a pretty good rally. It was a 50% rally from the high of 2013. And, you know, that's should be giving us a lot more to the downside. We're trading at around 192 right now, 193, but it looks like that has made a major top at these levels too. So I'd be looking for a short in the crude oil as opposed to a long as we look at some of these things. You know, the question that someone asked yesterday, and are asking it again, is about these different swings in these markets. And when this happens to be one from our good friend over in Calabria, Mr. Enzo. Anyway, if you'll take a look at this, oh shucks, this is not the one I want to see. Bear with me here, boys and girls. We'll get it up here. Hold on just a second. I'm running on a little bit of empty this morning. Well, that's one thing. I'm glad I never was a doctor. Anyway, you'll notice that these different patterns are coming in. We had that really nice ABCD structure that we pointed out, and we had a pretty good rally, but you have to decide which time frame you're going to trade on, and we've done a lot of work with this, and it appears that, you know, we're going to get gold down a little bit lower, and that's the key, you know, that we're watching now. We could be wrong, but right now it's doing what we expect it to do. You know, the silver's not acting very bullish, nor is platinum. They all stopped at really, you know, significant resistance levels, and we had a triple top in the gold. And but it's got a chance, especially on the long-term chart on gold, the long-term monthly chart. There is nothing bearish about that at all. The question is, are we going to hold this 1288 if we get there? And we're not very far away. So my guess is we'll probably hit it sometime over the next few weeks. Historically, gold and silver make highs and lows when I'm in Hong Kong, so maybe that'll happen, you know, during that time. I will not be here Wednesday and Thursday, folks. I'll be back on Friday, and that's because I've got to do some traveling, and there's all kinds of time changes involved. And then I'll be in China and Hong Kong to visit some of our friends there. We always have a really a wonderful seminar while we're there, and meet some of the folks that we got to know very well over the years. Let's take a quick look here at the Treasury bonds. As you remember, we really wanted to see those bonds get up to the area of 75. Let's try it again, Larry. 145.26. And we only got to 145.11, and now we're trading below 144. Folks, these bonds and notes, their interest rates are going higher. It doesn't make any difference what the Fed does. They could do something short term, but long term, it's out of their hands. You know, these markets and these are huge markets, folks. These are markets that are much bigger than the stock market, and you know, money talks. So pay attention to what these interest rates are doing. If you haven't locked in low mortgage rates, and you still can get some, you know, under a little over 4% now, I believe, but I would certainly lock those in, because you're going to be seeing rates go a whole lot higher, and there could be a lot of things happening in that bond market that could shake things. For instance, if China, because of these tariffs, decide to buy less Treasury bonds, that's going to put a lot of pressure, because 60% of that stuff goes to China. So there's going to be a lot of gerrymandering in these markets. So pay attention to what you're looking at. You don't need to know the fundamentals. Just look at what the prices are doing. You know, so if prices are going down, they're probably going to continue to go down. If prices are going to go up, they're probably going to continue to go up. So watch the patterns, watch the ratios. They'll help you to get out of the jungle, but even sometimes, you don't get out of the jungle. You got to take a hit and you move on to the next one. Trading is about making mistakes and discovering them early and then moving on to the next trade. That's the main thing. I've been asked to take a look at this silver chart on a long-term basis. Wow, it's shows almost over. Shut the front door and raise the rent. You'll notice here that we're looking at that $15 an ounce, boys and girls. That's it. 877-927-6648.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earn me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, so far the first 25 minutes of trading, all we've done in the S&P is to come down and stop at the 78% level, 2719 of the overnight range. If we can get this thing above the 2740 level, we've got a chance to see the market rally, a great deal more, possibly getting it up to 128 and change without too much trouble. But the key to remember here in today's markets is to watch the crude oil at this 63.30 a barrel. That's where we're trading right now. That was the high. I think we're trading at 63.19 right now. So if it gets above 63.60, then we're most probably going to go a lot higher. But it hit that spot on 78% number, right on the money, and now we'll see what's happening. Also for bond traders, we just made a 61% retracement on the daily down there at 143.20. So pay attention to that one. That could be a big indicator of what's going on today. So we're getting a lot of up and down so far early in the market, which is not unusual. We see that all the time. Below 2,700 in the NASDAQ, the S&P 500 is very, very bearish. And if we rally, you want to look for a place to get short, watch the ABCD structure come in, and then you'll have a better idea of what to look for. But those are the main ones to see what will happen. I know the Fed is out there tomorrow, so pay attention to that. That's always interesting to watch. Be patient on the gold and silver. Opportunities are coming, great opportunities coming in the grains, folks. I've looked at this from a lot of different ways, talked it over with Cy Monley at Sylvius and Rich Anderson, and we're all seeing pretty much the same thing. If we get any slightest bit of weather problems, we could be looking at some explosive moves in these grains, and they take very little margin to get involved in. So keep an eye on that. That's got a really good chance. We cover it in the newsletter 24/7, and so that's about it. Have a wonderful time. I'll see you folks on Friday.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!